Instead of pursuing the false hope that another entitlement program is going to reduce healthcare costs eventually, why don't we drive costs down now so people who want health insurance can afford it? One of the ways to do that is through a health insurance exchange where providers, subject to state licensing requirements, can offer their products to the public in one place. Just so you know, most of what I'm talking about in exchange comes from an article on heritage.org by Stuart Butler. The citation will be at the end of the episode. Whoa. When I talk about insurance exchange, I mean on a state level, not a federal level. I think doing it on the federal level would overwhelm the system. Keep in mind that health insurance is about 17% of the United States gross domestic product. I don't think making massive changes to something that large is going to go well. 50 states, 50 laboratories. When we've got a clear winner, we can go national. And also, by doing it on a state level, you can ideally avoid a prolonged court battle over federal preemption of states' rights, like they did with telecom. Of course, these days, states are so easily bribed by federal money that may not be an issue. So, what is so great about an insurance exchange? Well, for starters, number one, it puts information in one place and it's standardized so that it's easier to make a cost-benefit analysis. That allows competitive forces to be at work and ideally drive prices down. Two, it's portable. So if you quit your job, or if you lose your job, or if you work for a company that doesn't offer coverage, or you don't qualify for coverage, you can still get it. Three, even though companies won't necessarily offer coverage, they can still take advantage of their existing payroll infrastructure to pay the premium. They can deduct the premium from their employee's paycheck, or maybe a partial premium if they're going to actually make a contribution. And so when payment is made this way, like an automatic mortgage deduction or 401k contribution, it reduces the payment risk built in by insurers, and they can pass that savings on to the customer. Next, and probably the most important, it creates a large, stable pool of people to spread risk over that reduces the cost per capita. That mimics the best features of traditional coverage in a large company. Administrative costs go down. That's always important for small companies. And last, it levels the playing field a little bit between small companies and large companies. With that stabilization of the risk, a small company can actually offer the kind of coverage that usually only a large company could have offered. So what is it going to take to make this happen? Changes in the tax code.